Hey, everybody, Economic Ninja here. I hope you're doing well. I've got a story that's a few days old, but I think it's very important that we touch on this because it's about Europe, its collapse, and now it's Lehman Brothers moment. It's out of Bloomberg. I'm going to share the screen. We're going to talk about it. And then we're going to chat afterwards and I'll give you my 2 cents on it and see if it lines up with your 2 cents. It's entitled Europe's Lehman Warning on Energy Prompts Flurry of Cash Aid. Price jumps are increasing margin calls on power providers. Multiple governments are offering credit lines and loans to help. All right. First off, I want to explain something. These price jumps, which are causing margin calls and really putting a strain on power providers and all these companies that are investing in these hedge funds, mutual funds, pension funds that are invested in this sector that are now being margin called. Think about this. Multiple governments in the EU, right, are offering credit lines and loans. This is exactly what happened in the summer of 2008, which ultimately took down Lehman Brothers, but it also massively hurt many, many other funds and banks. Okay, so this is happening right now. And what's neat about this story coming out a few days ago, I think it's on the 6th of September, you now see the absolute insanity that happened when governments started coming up with ideas. And it got shot down, but I mean, how stupid of an idea is like, well, we're just going to cap the price that Russia can pay, or charge us for energy. I mean, it is absolutely ludicrous. So it says here, European governments are patching together emergency measures to support utilities amid fears that companies will buckle under the weight of growing margin calls, worsening an energy crisis that sent prices soaring and left the containment short of gas. Or sorry, the continent containment. Man, my mind is spinning. The reason why it's spinning is because as I'm reading this line, all I'm thinking about right now is the sheer scope and size of the EU collapsing under the weight of literally energy prices hyperinflating. It's amazing. When in 2006 to 2008, while I was liquidating all my real estate and watching America's banking system through the MBS, the mortgage-backed securities market, come crashing down, the feelings and emotions were intense. And I am literally able to share this with you in real time. We are watching them collapse. And I've told you that America should be going down alongside of this ship, our ship's going down within about 4 weeks. And the reason why I say it's going to be so close, you're going to see in our markets, is because of how tied we are to Europe, the European markets. All right. Between especially how the Fed is tied in with the Bank of England and the World Bank and these swap lines and all this, just the IMF, absolute craziness. We are so tied in with them. It says recent days have seen a flurry of news from Sweden to Switzerland to the UK as companies and governments try to get grips with the situation. Get to grips. Norway's Economies ASA has said that European energy trading risks collapsing under the weight of margin calls amounting to at least $1.5 trillion. Think about this. $1.5 trillion in margin calls. To give you an idea of the size of this, the bailout package, the first bailout package, the big one that was voted on by Congress to help bail out the banks in 2008 was $700 billion. This is over double that size just in margin calls. All right. On Tuesday morning, Finnish utility Fortum got 2.35 billion euros to bridge funding to ensure adequate liquidity. Switzerland granted Axpo a credit line of up to 4 billion francs. The company, which produces and trades renewable energy, asked for the credit line but hasn't used it yet, which means they are foreseeing issues and they're trying to secure financing right now. Now, you could see Dutch front month gas future margins have soared tenfold in the past year. And obviously, this started in mid-March, but you are seeing it now getting worse and worse and worse. And now, if you think about it, remember what happened in mid-March. That's when we started seeing Russia, the Ukraine issue, right? Now we're seeing Russia go, we're pretty much not going to be supplying you energy, especially at these prices. And it's going to get worse. Okay. Along with such actions have come dire warnings as wild price moves increase the amount of collateral companies need to maintain hedges. Finland is warning of an energy industry Lehman Brothers moment, which companies facing sudden cash shortages. It and Sweden announced a $33 billion emergency liquidity financing Sunday to backstop utilities through loans and credit guarantees. Look, guys, I'm going to share this story below so that you guys can read it yourself, but I want to make this very, very clear. I have never in my life as an investor, my investing past in history, and especially my past in investing in precious metals, have ever seen a better case for investing in gold right now. This isn't financial advice, but I'm telling you, I have been moving some of my cash into gold. Now, the thing is with gold is that we could see gold, paper price of gold trade down. I say this all the time because right now, as you're seeing margin calls, what do these investment funds do if they have exposure to gold? Primarily paper gold is how they do it because they need the liquidity. They need the super fast movement, right? What do? They sell their insurance. They sell it to raise funds. So you can see in the short term, paper gold sell off. Problem is, when that happens, people are going to rush into physical, and that could shoot the premiums up. So quite frankly, I'm telling you, there's never, in my opinion, which is not a professional opinion, not financial advice, I've never seen a better time to literally start looking at gold because, like everyone says, well, why hasn't gold been doing what we think it should do? Like, well, gold's always last at the party. It shows up and goes, let's rock and roll. And then it takes the party up to 11. Put in the comment section what that's from. Because 11's louder. And I believe that you're going to see this thing switch and it is going to ignite a fire under gold because of all of the turmoil. Wealthy people are going to start moving into precious metals, gold and silver. We're already seeing it in the silver markets, right? Where a billionaire has taken delivery of, what was it, $50 million worth of silver. And she said, hey guys, let them know I'm going in even more, because that's that shockwave. That's to tell all your billionaire friends, I think it's time to start moving. Are you going to be last of the party? Maybe, maybe not. But the facts are there is worse things happening day after day, and it is not going to get better until we have a massive correction in the stock markets and equity markets worldwide, and then the money printers start really ramping up. I mean, if you think they're ramped up right now, get ready. You haven't seen anything yet. All right, guys, that being said, I thank you so much for watching. Take a look at the link below. And again, if you guys haven't followed the Real Estate Ninja or Real Estate Ninja, that's my other channel, backup channel, please go take a look at it and hit subscribe just in case something gets crazy over here. All right, guys, that being said, the Economic Ninja is out.